Hello and welcome to this video. In this video, we're going to be talking about the difference between statutory accounts and management accounts. And we're going to be making sure that you know why there's a difference between the two, which one is quote unquote the most important. And also we're going to find out what you're going to do going forward to ensure that they're as close together as they possibly can be. My name is Patrick. This video is going to be all about making sure that you are understanding the difference between management and statutory accounts. Let's roll that VT. Hello, my name is Patrick and I am a chartered accountant, a certified UK trainer of Fancy New Logo, that QuickBooks Chap on the internet, and also head of accounts here at Boffix. Now in today's video, we're going to look at the difference between statutory and management accounts. Now what's the difference, I first hear you say? Well, basically, statutory accounts are the accounts that have to be compiled for compliance reasons. They're usually submitted to places like Companies House or HMRC, where your management accounts are ones that we would highly recommend you do and continue to do on a regular basis, but there's no statutory requirement for them. They are basically accounts to help you run your business. So, first question, why have two sets of accounts? And I suppose the second question is, which one's more important? So first of all, let's discuss why there's two sets of accounts. And to do that, I'm going to show you the difference between the two. Okay, so let's look at some examples then of the two different types of accounts. Now, first one I'm going to show you is your statutory accounts, ones you probably would have seen because these are ones that fundamentally you need to have had in your business to be able to submit to Companies House, HMRC, etc. Now, normally when it comes to those statutory accounts, you get two different types. You get your full set, as we've got down here, and the idea of this full set here, as you can see, is there's lots of words in here. Lots of words you've probably never even considered or looked at. There's what's called a director's report, which effectively means that you're going to be happy signing the accounts and making sure that you're happy with what you're responsible for. You probably or hopefully got an accountant's report on there, which shows what they're responsible for. You've got what's called an income statement. You've got what's called a statement of financial position. And we've done all this in more detail. So have a look at some of our other videos, which we'll try and link in here, which will give you better an insight what these actual reports mean. But as I go through it, what you'll notice is there's all these what we call notes to financial statement. And this is the key difference between set of statutory accounts and management accounts. You see, notes to financial statements will just keep going and going and going and going and going. And again, maybe it's something you've never even probably realized or looked at in your set of accounts, but you have all of these options. You've got the definition of what stock means, just here, look. You've got factored debts. You've got preference shares. You've got all of these words where, from an accountant's point of view, we probably will just ask you the questions or we'll make the assumptions on your behalf, but they're actually really critical. And the reason that these are critical is because a set of statutory accounts is governed on how they're prepared. There's a load of rules that we have to abide by. In fact, if you look at those accounting notes in more detail, you will notice that they are being prepared in compliance with FRS 102. Basically, FRS 102 is the standards in which we as the accountants have to prepare these accounts in. And the whole premise of having to do it in this way is that we as the accountants are governed by these rules. And it's to ensure that if you were going to look at two very similar type businesses, imagine you had two hairdressers, for example, maybe they even have the same demographic. Well, if you've got two very, very similar type of businesses, then when you look at the financial statements, what you want to be making sure is that those financial statements are going to be very similar from one to the other. And in fact, you should be able to go and look at both of them and have confidence they've both been prepared in the same way, which means that whatever the results is from one to the other, they should be consistent. And that's the whole point of financial statements, that you can get two of this very similar types of businesses and maybe learn something from them. Or you may want to decide that that's a company you want to actually look at acquiring over one or the other. Maybe one of the businesses is actually doing really, really well, while the other business isn't doing quite so well. Well, maybe you can get some learnings as to why one business is doing well and one isn't doing quite so well. And for me, that's the fundamental reason why financial statements are done in this way. That's why they're governed by FRS 102, so that every single set of accounts, in theory, are done in the same manner. And as accountants, when we throw all these words at you, like work in progress and stock and debtor days and all these other elements that we throw at you to try and compare a set of accounts, it's not us making those words up as the accountant. It's because we're governed by FRS 102 or whichever standard of accounts that we're doing. And it's that is making us ask those questions from you so that we're making sure that you are compliant. So statutory accounts, as we can see, are very, very formulaic. And you'll notice that if you went from one set of statutory accounts to another set of statutory accounts, you'll probably find that they are laid out in pretty much the same way, and that is by intention. Now, statutory accounts wise, they come in two formats. You've got your full sets that we've just looked at, or you've got affiliated or abbreviated or micro, whatever version you have, but they are taking the same data from those full sets of accounts, but make them into a much more condensed manner and trying to strip out anything that could actually be quite sensitive. And as a small business, we're allowed to do that, and we're allowed to then show those abbreviated accounts on Companies House. And in theory means that we're not giving away maybe trade secrets, things like that. And the idea then is, if you look at them, the abbreviated accounts is, again, they're still following that same format. So they're going to be very, very strict in the way they're presented. We as the accountants have to put them in a certain order. We have to have certain notes on them. We have to have certain elements to them. And basically there's a big checklist that we as the accountant has to provide before they're ready to be submitted. But again, it's done on purpose. It means that whenever you take a set of accounts, you should be able to have a confidence that because they're being done by a certain standard, that they are going to be done in the same way, so that you don't have to interpret the accounts as much. You should be able to grab the data on there and be able to do whatever due diligence, whatever you need to do as a stakeholder to make sure that you are looking at those accounts. And to me, it's the most important aspect of it. Now, that statutory account makes a lot of sense, doesn't it? You are compiled to do it, and you most of the time will get yourself an accountant to do that for you, so you don't have to worry about how they're presented. You just need to make sure you provide them the right details and information so that they can extract the info and get those complied accounts done for you. But what are management accounts? Well, management accounts are exactly whatever or however you want to see them, and they're not always called management accounts. And management accounts can be called whatever you want to call them. And effectively as well, the most important person that's ever going to read them is you. Now, I've got a set of management accounts here, and I've just basically added what I've wanted. So here it's got a nice little front page to them. It's got a table of contents. It's got a profit and loss where, well, there's no data in here. The balance sheet's got some movement on there. Statement of cash flows on here. There's an aging reports data that you keep going. There's all sorts of information here. VAT 101 report. We've got the bill payment list. And at the end, it says, well done. Now, what the idea of this is management account is completely up to you what gets shown on. You are in control of what information has been shown on there and how that information is presented. You can do whatever you like. And what that means is it's about you extracting data about your business and making sure that you are having the data that is needed to make those right decisions. The keen-eyed of you would have noticed the date range. On these management accounts here, these are for the 31st December 2023, and they were prepared on the 28th of January 2023. So either I've got myself a mystic ball and a crystal ball and I'll be able to project going forward, or these are more up-to-date accounts, and it's just that as every month ticks by, I'll update them and I'll make sure that they're showing. Because a management set of accounts are mostly, in the most important aspect of it, are they done on information that's relevant as now. We would recommend at least a quarterly review of your own books so that you have that data to be able to make information, make decisions, and be able to be on top of it. Now, statutory accounts, on the other hand, though, if we go back to those set of accounts, I mean, this is a very extreme set here. We look at the date of preparation, it's 28th of January 2023, but it's relating to 2018 set of accounts. Now, that's an extreme example, but that's exactly what statutory accounts are. Because of the complexity of them, because we have to go through all of these extra bits to them, we have to do extra signages to them, and we have to go through all these elements to it, your statutory accounts are always going to be a lot further down the line than your management accounts, whereas your management accounts are always going to be up to date. Now, the key thing about all this, now you know the difference between a statutory set of accounts and management set of accounts, is what they're used for, and more importantly for you, is how to get the most out of them. Well, statutory accounts being statutory accounts means that they're always going to be quite behind in terms of what you need to do. And if there is something fundamentally wrong with your business, it can be up to 18 months before you actually find that and spot that and actually be able to action it. That's why, for me, statutory accounts should always be something that are just completed from a compliance point of view. Make sure you understand them, make sure they look correct, but they should be based off your management set of accounts. And your management account should be looked at on a much more regular basis and giving you details that give you information about your business. Now, we use QuickBooks, and QuickBooks gives you loads of options. That set of management accounts I just did there took me literally 25 seconds to create, and I could have gone and put any sort of elements to it that I wanted to. So the data is always going to be presented to you. And sometimes it's a good thing, because sometimes it will tell you there's a glaring hole within your bookkeeping at the moment and you're not getting the data that you need. Now, having to see that on a month by month or quarterly basis means that should give you the opportunity to action that and give you the chance to be able to make sure that you can see that data. A lot of people also get confused as to why management accounts are so different sometimes to their statutory account. Well, that's because statutory accounts, again, have to be compiled on certain aspects. We have to look at our accounts on what's called accrual basis, which basically means that they have to fall within that tax year. So we've got trade debtors, trade creditors, prepayments, accruals. We've got all these different aspects that can actually affect them. We've also got stuff that actually don't really affect your cash flow. So you've got things like depreciation and items like that, which can completely and utterly throw out what your accounts look like from a cash by cash basis. Whereas your management accounts throw away all of those rules and regulations and they base it on what you need to know. Now you've got two options. You could run your management accounts completely in line with your statutory accounts, and each and every time you prepare a set of management accounts, they are pretty much a mirror image of what those statutory accounts are going to be. But ultimately, I feel like that A is a lot of time, so that's got to be a resource that you've got to resource one way or another. And B, I'm not sure it's going to give you the information you necessarily need. You see, at the end of the day, you need the information that's going to be right for your business. If your business is very, very cash focused, then you're going to really need to look at it from a cash by cash basis, not necessarily a statutory basis, which isn't really taken into cash in all that consideration. So when you look at your management versus statutory accounts, my personal opinion is you make those management accounts to be what is right for you. Put on those reports what's going to help you make those critical decisions. But bear in mind that that will mean that those management accounts won't necessarily reflect your statutory accounts. But that's not a problem. You see, as accountants, if we go and prepare a set of statutory accounts and we make some wholesale differences and change what the accounts say, because we're compliant and making sure they are going to be compliant going forward, then that's fine. Because what we do as accountants is we extract the information, we create a set of a compliance account, and then we get to the point when we're ready to submit. Then what we do is we put what's called opening balance journals, and we basically take what was submitted, taken what was on your management account, and we bring the two together. So you'll always have a position where your management accounts will effectively catch up to what happened in your statutory account. And that is normally the best way of doing things. Now, it does cause confusion because it does make people feel a little bit nervous that their statutory accounts don't agree with, say, what's on QuickBooks or what their management software is, but that's not a problem. Ultimately, what's important is you're using data that makes sense to you. And if you're making sure you've got one reconciled point to another reconciled point, and you're looking at the difference between those 2 points, then who cares what the statutory account is at that point? You're then making a decision based on how, if your business has gone up or it's gone down, and you can make that decision going forward. See, ultimately, statutory accounts versus management accounts is going to be down to what's right for you. And for me, I find that management accounts are by far the most important, and I highly recommend everyone looks at doing them. If you're not doing them now, speak to us at Boffix about how we can get you some management accounts put together, because I promise you management accounts are the way to make sure that your business is going in the right direction. And looking at that management set of accounts can be crucial to understanding what's going on, especially when we're going through some harder times as we're looking like we're going to. You need to be on top of what's going on before it's too late. If you rely on your statutory accounts, well, that could be information that you could have needed 10, 12, whatever months before to be able to make a decision and actually be able to solve the issue. So, management accounts versus statutory account. Management accounts is a bit of a wild west. You can have whatever you want in them, and that's a good thing. Statutory accounts are very, very strict on what is shown in there. Your statutory accounts are compliant, so they're always just going to have to be filed as they are, and you just take them as and accept them for what's needed. Whereas management accounts, you can do what you want and get the information out there that's going to be right for you. Don't get too complacent about having to match the two of them. That's what your accountant's for. That's what they're designed to do. Grab whatever data they've been presented with and convert it into something that's compliant to be able to be sent. But what do you think? Do you do management accounts? Is management accounts something that you're taking responsibility of? Put that information down below. We'd love to hear from your opinions. Maybe it's time we did a follow-up video on this and we talked about how you guys are creating management accounts opposed to us. Maybe it's time that we look at better ways in which we can produce management accounts for you. Maybe there's time where we can actually find information that's going to be right for your business. I'd love to know below what you include on your management account, so then we can understand if we're giving the right information for our clients. Also, don't forget, if you do need to have any more information about this, put a comment below or reach out to us at Boffix. We're here to make sure that your data and your business is being able to looked after in the best possible way. Real-time information is so important at the moment, so having management accounts that go with your real-time information can be an absolute lifesaver. And I highly recommend that you make sure that you look into that going forward. My name's been Patrick, and this video, as always, been an absolute pleasure to do for you. Don't forget, if this video has helped you in any way, drop us a like, drop us a subscribe, all that sort of stuff. It really, really does help this channel, and we really do appreciate each and every one of you who goes out of your way to do that. As I said, my name's Patrick. This video has been a pleasure to do, and I will see you in the next video. Bye for now.